Welcome back. Markets are under pressure again this morning. This after a roller coaster session on Wall Street yesterday. Joining us right now, hedge fund research president Ken Heinz. Ken, good to see you this morning. Thanks for being here.
Thanks for having us on.
You've got this exclusive data that you get to see and report about hedge funds. Tell us what hedge funds are doing in this wild trading that we've seen for markets over the last month. What can you tell us, Ken?
Yeah, so we saw a mixed recovery from the October declines in the month of November, which is actually led by the large credit multi-strategy, a lot of the firms that people are familiar with. And some of the trades that they've been doing in the last month, the last few weeks, coming into today's employment report really has a lot of those large credit multi-strategies have to do with yield curve flattening trades. And I think those are the trades that drove gains in the month of November, and those are the trades that people are carrying into the employment report today with the prospects for slowing interest rate increases and obviously the stock market volatility we've seen in recent weeks.
Yeah, but Dagan, we haven't had a good performance in terms of these hedge funds, and we're still talking about 2 and 20 in terms of fees.
Right, absolutely. And there were a lot. I mean, I'm curious to hear about which types of funds suffered massive losses, because there were some oil positions with the downdraft in the cost of crude oil, that there were a lot of hedge funds suffering. What do you expect in terms of closures of funds even?
Yeah, in November, the energy-based materials area was the weakest area of performance. Those funds will be down about 4% in the when we release the results later on today. But again, on the other side, we had the large multi-strategies, and we actually had a recovery in emerging markets funds, which were some of the leading areas of performance, up 2.5% or so.
So what would you be doing at this point? I mean, in terms of the oil trade, I mean, that's probably the big loser, right? As Dagan said, in terms of hedge funds, what are they doing with the money in terms of allocating money away from oil, given these moves?
Yeah, I think that people are still actively trading in that space. I think what you've seen is, as I was saying, is people have reduced their equity market exposure. And I think what people are looking at as you look into 2019 and some of the new trends, trades that people are getting into, you're seeing more and more funds actually getting into legal cannabis stocks, which has kind of been a hot area.
Right.
And in addition to that, what investors are looking at, in addition to these large credit multi-strategies, is looking at liquid alt strategies, which are become very popular. This includes things like UCITS and 40 Act funds, and also looking more and more at risk premia strategies. And again, what investors are looking at on the wish list of investors for 2019, performance, low fees, and liquidity are 3 of the top things that are really leading that.
Yeah, that Tilray performance really was incredible, 650% on day one, the cannabis company. So that's obviously one reason that people are saying, you know what, there's growth here. This is an area I want to get in. Go ahead, John.
Hey, Ken, let's talk about the jobs numbers that are coming out in an hour. If we get very strong numbers, I could see the market being worried that leads to a more hawkish Fed. Very weak numbers, I could see the market being worried that it means the economy is slowing down. What, in your estimate, is a bullish number for the stock market? What kind of report would you like to see to support stocks, and what would be a bearish report for the stock market?
Yeah, I think right now, I think that the jobs number will bear out what you've heard from a lot of the managers I speak with and a lot of the guests that you've had on this week. Distinguished Larry Kudlow, Steve Mnuchin, my good friend Art Laffer. The U.S. economy is in good shape, and I think that's going to be borne out by the report today. I think on the volatility side, so I mean specifically, I think 250,000 non-farm payrolls would be a good number. I think you would see a strong market reaction. You've already seen the Fed indicating a propensity to be backing off of interest rate increases, and I think that will be a good thing. I think if you see something on the lower end, 150,000, I don't think that's bullish. I think that's where the volatility comes in. But just to touch on that volatility, one more thing. The recent volatility, I think, coming out of the environment that we've been in, you've seen, I think that the U.S. wants the agenda. I know that Donald Trump has said he's a tariff guy, but I think that what they want is the free fair trade. They want the people to respect the IP rights. And then when they don't get those, the market sells off because people get worried that the inefficiency of the tariffs is going to be brought in.